following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. This is a pretty cool card. You cannot change other people. To try to change them to fit what you want them to be is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrials up 134. NASDAQ is flat. S&Ps are up 750. Gold contract down $3.40, trading at $12.5620 an ounce. Let's get over to the gold contract and start right there. Gold out here, bottom line, what we had yesterday gold goes topside, bottom line, volume wasn't bad. We get up to 1266. Then what does it do? Just gives it up on price. Once it hit the 1266, sold off all day, end up closing out at a price point of 1259. And when I say close out, folks, what happens in the gold contract is that the closes in the gold contract happen to be at 1:30 Eastern Standard Time. So when you do wake up in the morning, and whether you're watching CNBC, Bloomberg, whatever it is, when you see those numbers come across, if they look skewed, that's because they're taking them from 1:30 in the afternoon. So last night, overnight, we get down to 1247.70. You were going against the strength. The strength we were going against there had 393,000 contracts traded. Bottom line, it rejected it. It did have lighter volume, so now bottom line, we're going to see if there's any juice going topside. If we go over to the actual equities that have held up really well for the way that the gold has basically come down since April 14th, the GDX today is pulling back with 8 million shares, and this is a beauty. You're going into 36 million as well as 53 million. And bottom line is that these are building cars, and I expect we're going to get back topside once again and go after this $22.93. We'll see whether we get any juice as we get up into that level. Oil, API numbers going to be coming out at 4:30 this afternoon. We take a look at the oil market, what we have with oil right now. Crude oil is trading at 74.03. You've hit 74.70 out here, and oil's hanging right at these highs, folks, okay? We had broken into a whole nother range on the 28th of June, 28th of May, yeah, 28th of June. We've been up here for about a week and a half. So we'll see what these numbers bring. What you do have inside that oil market is this, is that the 75 to 77 area, you have some flack. If we pass that area, you're going to be at $105 in the oil market. It's pretty intense, actually. Notes and bonds. Bottom line, notes and bonds want higher price. If we go take a look at the 30-year bond, what you're going to see is that 30-year bond right now is trading at a price point of 145.01. You've done 177,000 contracts, and what you have out here is that you're backing into 200,000 contracts. So you're pulling back with dramatically lighter volume, and the note and bond market continue to say that they want higher prices. It's pretty amazing, actually. We're in the context that we know the Fed's going up in short-term rates. But guess what? Someone keeps buying these notes and bonds. You know, when we take a look at it, the note and bond market basically put a bottom in on May 18th. That bottom inside the 30-year bond is 139. We're at 145. If we do take a look at the 10-year note right now, the yield, we're at 2.867. King dollar. What do we have with King dollar? Well, King dollar very well may be an ABC structure on the way down. Now, what's going to be intriguing about this is that we're going to know pretty quickly what we have here, and this is what it is. So, King dollar first off. Let me bring this back and put it on a continuous contract. So, King dollar for over a month has been trying to take out the October 2017 highs. That's 95.07. It's actually longer than that. Let's see, 1, 2, yeah. Oh my God, this almost, that's 4. We're almost on 2 months right now. The first time I tried to take it out was June 1st, the week of June 1st. So each and every time it got up there, it couldn't handle it. Now this is the first time that we came off of those highs and we had volume on the way down. Then what we had today, and this is pretty, you know, impressive if you think King dollar is going to pull back, is that what we did yesterday is that we went into its strength. You had much lighter volume. We came down yesterday with 17,000 contracts. Well, we were going into 57,000 contracts. That's the strength that we had on June 14th. What we did today is that now you went higher and you gave it up really well, actually. 13,800 contracts. And you're going into 28,000 contracts. That's set up to make a run for the lows once again. We'll see how it handles, number one, the swing point, which is 93,440. Number two, which is larger for sure, is the beginning of the breakout area. The beginning of the breakout area is 92,820. That number is the important number to keep your eye on. Because if we barrel down here and you take out the B point with volume, and you have expansion of volume, then that very well may be that 95 area actually was the top in the dollar index right now. Some of the higher volume equities out here, well, actually, let's go to the XLF first. So the XLF, that got the Dow going topside yesterday in a big way. And guess what? One-day wonder. What do we have out here today? XLF. Yesterday we did 73 million shares. Today you got all of 38 million. You get over the high. You're going to be underneath it. This is right now. You got a dead cat bounce going. We go take a look at J.P. Morgan. J.P. Morgan is going to kick off the earnings inside the banking structure. J.P. Morgan also gave it up. J.P. Morgan get to 108. Well, yesterday we did volume of 13 million. You get 10.5 right now. You got up to $108 and gave it up. And guess what? This high volume low is 103.98. You're at 106.72. We take this and we just put this on a weekly basis. What you're going to see out here is that on the weekly basis, you are still laying at lows. In fact, this also can be setting up a weekly ABC structure on the way down. So as we come into the end of this week, as we start kicking off with numbers, you can expect this volatility to pick up inside the marketplace. Dow Industrials right now are up 135. The NASDAQ up 2. NASDAQ has no juice. In fact, the NDX 100 is only up 3. S&P is up 7.5. We'll come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now trading up 137. We get the Nasdaq up 2. S&P's up 7.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got an outstanding show right here every trading day, noon to 1 Eastern Standard Time. Also has a great newsletter, the opening call. Now, the way you get this opening call is you come over to our website at TFNN. Go to newsletters, go to trading newsletters. You can check out the opening call, 30-day money-back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you.
Cool. So, where are we going to start, Basil?
So let's go to the Dow. Let me just get this a little softer there. Okay. So what we're looking at is the Dow's up 139. We had gone short for subscribers the day after the high was made, 25,402. We switched from the long side to the short side. We took some off on the way down at about 24,400. It went down just under 24,000, hit the 200-period exponential moving average and started turning up, but it was really struggling. And over the weekend, I was making a decision about whether we should cover the shorts or whether, let me just get that off, whether we should cover the shorts or whether we should just hold this position and let it play out, because what's really important about this is that I was waiting for the MACD, the moving average convergence divergence, you can see in the daily chart on the left, to cross positive. Well, it crossed positive yesterday in a very strong move. So now the whole area of 24,900 is going to be very important. If it closes above 25,000 for 2 or more days, I would say then there's a good chance that it's going to go higher. But really what I'm looking at is the weekly chart fitted exactly the pattern that we were looking at, which is the lowercase h going to a lowercase m. You can see the template that I drew there.
Okay.
We're doing that, and now there's a bounce. But even with this bounce, the technicals are still very weak. So I'm expecting that there's a good chance that there's going to be a failure pattern here, because basically what I'm looking at is that the Dow's really catching up to the Russell 2000 and the QQQs, because they had a spectacular rebound and even went to new highs, but the Dow has not done that. So I'm watching this closely, and once again, I've got to always mention the monthly chart is still looking pretty good, both in the Dow and the S&P. But within the context of this kind of portfolio that I give to subscribers, because I like to have a mix of all sorts of things, we are still holding short the Dow. We've still got a short position left in the semiconductors. We shorted that as well. We ran it on the way up. We're lucky to hold it all the way and then switch to at the top to the downside. So we've still got some on the SMHs, some short. I'm watching this closely because I've spoken to you before and said that the semiconductors basically led the market up for the last few years. And every time there was a correction, it included the semiconductors. And then all three, the S&P, the Dow, and the semiconductor index did not retrace in this last move to new highs. So they kind of moving together. So I'm watching the SMHs very closely. But within that context, a week ago today, Tuesday a week, we went long the IBB, and that had a really strong move. We in at about 100 in the 110 area, and it's trading at 116.71. This is a really strong leg up. And what's really important is if you look at the weekly chart, I'm going to draw this a little closer.
You're going to have to go over to Cambridge and give Biogen a nice big kiss.
Well, you know, one of the reasons why way back in 2015 we went short for subscribers and actually got about 111 points to the downside is because by chance I was driving through the MIT area in Cambridge. And I'm looking at all these buildings, and every one of the new buildings was a biotech.
Right.
Not only that, the rentals had just gone through the roof. Kendall Square, which was years ago, all they had was the fish place. What's it called? Oh,
Legal Seafood. I had one Kendall Square, Basil, in 1984. I had an office there in that building.
In the building. Oh, well,
it was the first building there. Isn't that crazy?
Yeah. And now it's well, I like development, but this is really over. Anyway, I was looking at it and I said, hey, this has to be a top in the IBB. Plus, I had a peak F in the weekly and a D in the monthly. So anyway, so now we're back in, and the reason being there were two reasons for this. One is that I was thinking the sector that held the best in this particular period, where there's a lot of confusion, would probably lead fund managers to keep going back into it, and that's kind of what they're doing right now. And you can see this cup formation. So I have a target if at 116.73. If any time in the next few days it can even touch 117.50, I think it'll retest the high of February, which was 119.30. And also, you know, you're speaking about the dollar. We still have a long dollar position, but the dollar gave me a sell signal to sell mode in the daily.
Good, sell it, will you? Sell it. Get everyone to sell it.
You want the gold to go up. But we also have gold,
exactly.
So we have gold stock, so that I don't mind, but as an intermediate term play. But what's really important here is that weekly chart is still very strong, and I have a little bit lower to go in the dollar. Perhaps it's at 94.16. I think it's going to go to the 93.50s, maybe 93.40s. That's going to be the big test for me. Can it hold that? And will we then have used up the time to consolidate and start to move higher? So it's a very interesting market. I'm not afraid to add to the long side, and I'm not afraid to go to the short side. I think this is the kind of mixed market that we've got, and I think that you've got to look at it as a split market. So the Dow's lagging, the S&P is a little bit better, the Qs are better than that, and the IWM was leading. And the IWM today is failing. So that's what's saying to me, keep in mind that there's a good chance that the Dow is really playing catch up at this particular point. And then, of course, we've got earnings coming up Friday. They start with the financials. We'll see, but they haven't done all that well. But I think we took a little position in one of the financials yesterday. We'll see if that's going to hold. But I think that you've got to look at this market as whatever you're studying, look at the charts, and kind of go with the picture that's showing you. Don't listen to the news. Don't even listen to what's happening in the other sectors. Each sector seems to me to have an individual personality, and I think that's what I'm trying to look at right now. Go for each characteristic.
It seems that, you know, like we had the NASDAQ and, you know, the NDX as well as the Russell at highs. It seems that they're taking some bread out of that, and they're giving it a shot of the Dow, saying, hey, the Dow's so low, why don't I try to give it some money?
That's what I'm saying. So the rotation through the different sectors is really what you've got to keep your eye on. In the big picture right now, I'm not sure this is the move that takes the Dow to all-time highs. I think the consolidation needs more time. That's kind of the way we're playing it. And you can see there's kind of almost a double top look at the QQQ, the NDX 100.
Listen, that Dow Industrials, I mean, that's a perfect head and shoulders. the question's going to be, you know, does it fulfill itself? You know, I mean,
right.
when you look at this is it's a long Head and Shoulders, man. I mean, you know, that thing, the way that this is set up, what you're talking, I don't know. We can bring it all the way back to like I don't know, a good few months. It's just kind of laying out here, and we've got that right shoulder happening.
And also the way I look at it is it's a rectangle formation. In a rectangle formation, it can last a lot longer than your patience.
Oh, yeah.
And at some point, it breaks either one of the resistance or the support. And it's like 23,300 on the one side, 25,800 on the other. That's the parameter for the Dow. And try to trade it in between.
Listen, folks, you can come over and get the opening call right now. The way you do it, go to TFNN, go to newsletters, go to trading newsletters, see opening call, 30-day money-back guarantee. And, of course, every day, every trading day right here, you can give Basil a call, noon to 1 Eastern Standard Time. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom. You too.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 137. You get the NASDAQ down 1. S&Ps are up 750, 7.50. That is inside the NDX 100. Strength out here today is Wynn Resorts is up 3.3%. You get Micron Tech up 2.5%. Checkpoint Software is up 2.3%. And IDEX Labs is up 1.7. Taken away from it is Cerner Corporation, which is down 4.6%. Biogen is off 2.5. You get eBay off 2.3, and Dish Networks is off 2.2. If we go to Biogen and take a look at Biogen, that's what I was talking about with Basil when he's into the IBB. Bottom line is that Biogen, what it had done last week is that you talk about a gap higher on an Alzheimer's drug. It was a monster. So what Biogen had done is that Biogen had closed on the 5th of July at 298. It opened the next day at 346. Monster move, 50 bucks up. Now, that being said, I wouldn't be buying this baby right now because what you're going to see, that gap's going to get filled. Bottom line, I don't expect it to get filled overnight. It came down, came into the gap today. Now, it's unusual that it actually can come into the gap this quick. Normally, when you get a gap away like this, you'll basically trade over that gap, whether it's 2, 3, 4, 5, 6 weeks. Then you come down, you test the top of the gap. You normally go back topside again. Then you come back down. It normally takes 4 or 5 months to get this thing filled. What is different right here is that we did come down very quick. Just a picture, 2 days ago, you're at 367. We got to 339 today. So the volatility is out here. And more than likely what we're going to see is that next week, week and a half, you're going to see that thing get filled. If it does get filled on lighter volume, well, guess what? That's where you want to be all over that thing. We go into the NQs. We take a look at the NQs. So the NQs were the strongest indices out there. What the NQ has just done today, it's going to be pretty wild, is that we just tested the highs that were generated out here between June 14th and June 20th. We got to 73.35. The actual high is 73.58. The closing high is, let's see, 73.20. No, that's going to be the closing high. 73.13 is your closing high. Yeah, 73.13. So what we have up here today, you're up there, hasn't been able to handle price. We go in and we take a look at the 3 Qs. We're a little bit clearer in the 3 Qs. So the 3 Qs hit the high, 177.98. Did 33 million shares. You're at 19 million right now. You've hit 177.72. So we'll see where this shakes out coming into the next. Coming into the close in the next few days, because what we are going to have is that number-wise, earnings-wise, you kick off big time, and we kick that baby off this Friday. We're going to take a look at the XAU, the HUI XAU out here today. Bottom line, rejected lower price. You're up 14 cents right now. You're trading $83.42. Good showing, no doubt. Gold Bugs Index, same type of setup. Gold Bugs Index got down to a price point of 177.34. We're at 179.16. Now, I don't get the volume on this until tonight at 8 o'clock. What's going to be really cool to see if we got lower today and we had lighter volume, because if that's what we have, we very well may have a ABC structure on the way up. In fact, let's go to ABX. Let me just go look at a couple of these bigger ones to get an understanding of what we have here. So Barrick Gold did it. Barrick Gold got lower. It's going to have lighter volume. That's a good indication that we're going to have lighter volume. Newmont did it also. It's not bad. Royal Gold. Royal Gold. Royal Gold. Here we go. Royal Gold's going to be a leader. Look at this. This is pretty intense, folks. So Royal Gold last week gets to a high of $98.53. Does 1 million shares, right? Pulls back off of that 3 days in a row. Today, you don't have any sellers. 164,000 shares. Going into 352, you get a high volume swing of 98. This is a great indication that good old Royal is going to go for this $100 mark. That's what it looks like. That's a big number. Let's go to Franco-Nevada. Now, Franco-Nevada used to be one of the strongest stocks, and that is basically, that needs some help. What we did do out here today is good news. We got lower price, dramatically lighter volume, 287,000 shares. You're getting into 674. So both of those are an indication that XAU, HUI, are going to have lighter volume when we get those volumes tonight, and they very well could be an ABC structure on the way up. King Dollar, as I talked about a little bit earlier, looks like it's going to be an ABC structure on the way down. We get into the oil equities. The XLE XLE, bottom line, 9.1 million shares. You're going into 16.6. That is looking to me like setup that wants lower price. Now, what's going to be intriguing here is this, is that the XLE hasn't been able to get any traction, and that is with oil at this $75 mark. So the XLE, you know, we've been in this consolidation for a long time. That's how oil likes to trade. The XLE is trading at the same price it was trading in 2007 before the peak. The peak in 2007 was 91. It goes down to 38 a year and a half later, then peaked out again in 2014 when oil was up at that $142 level. If we go actually take a look at the Chevron, and let's do ExxonMobil first. So if we do ExxonMobil, Exxon doesn't look like it has any traction. We go to Chevron, same setup. It's up a buck and a quarter, but not big traction. ConocoPhillips, that's up 72 cents. That's testing its high out here today of 71.71. Oh, this is going to be interesting. So that high, 6 million shares right now. You're at 4.1. We'll see how that baby shakes out. Inside the cryptocurrency market, bottom line is out here. You had Bitcoin having a hard time holding price at all overnight. Bitcoin came down. We're down 331 right now. The high of last night was 68.03. Right now at 63.64. So it looks like Bitcoin once again, bottom line, more than likely is going to try to test out the lows, and that's not much action inside that market. We go into let's go into Goldman Sachs. So Goldman, that had rung the bell quite some time ago at the 250 level, and we're at 226 right now. Goldman comes out with their numbers on the 17th at 7:30 in the morning. We put this up. So we're trading back where we were in December of 2016. This is quite a consolidation. You know, Goldman looks like it wants a lower price. You know, what the danger inside like a Goldman is this. We've been at the same level for a year and a half. When you're at the same level for a year and a half, folks, and let me show you how this is set up. And if we take a look at this, what you're going to see, in fact, I'll put this on a 5-year, a monthly. You can see it just as well. Well, actually, I do a 5-year weekly. I don't have to do a 3-year weekly, actually. And what you're going to see is each and every time you are up versus down, what you're going to see is all the volume is still on the downside. And that is saying that we are building cause to basically get down into this 209. If we break the 209, then you're going to be down at 178. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow right now is up 147. NASDAQ is flat. S&Ps are up 8.5. Let's go to our man Ken in Kansas. Hey, Ken, what's going on?
Hi, Tom. Well, it's going pretty hot here right now.
Is it? Well,
hot and dry. We need a little rain.
Hot and dry. So when it's hot in Kansas, what does hot mean? 90, 100?
Between 90 and 100, yeah.
Yeah, it's not
it's
bad.
It's in the high 90s all this week.
High 90s, I know. That's like Florida. Well, that's what we get. Once, you know, it seems like it's 90 every day, and then...
you get a little rain every day, though, don't you?
We get rain every day. Yes, we do. Yeah, which helps tremendously. There's no doubt.
Yeah, you bet.
And, you know, what's happened this year, folks, this is like, you know, I've been here 20 years now, and the last 10 years, when the summer comes, we haven't got quite as much rain as we do now. This is like when I first got here, which is really cool because everything is green. You know, I mean, it's pretty cool. Yeah. It really is.
Yeah, when I and my wife used to go down there in the winter times. So we went down about 12 years. So I have a son down there who lives in Orlando, so we're kind of familiar with your weather.
Sweet. So what are we going to look at today?
I'd like to have your outlook on VSAT, the global communication.
Okay, so let's take a look at it. They provide advanced broadband digital satellite communications. The low of the year is 57, the high is 80. Okay, so... Okay, so this thing just come off of... I see. Yeah, it's been in consolidation for quite a while.
I've actually got a couple of call options on it for December 21. Okay,
and at which strike price?
At $70.
Okay, that's pretty good. You're right next to it right now. So this just in 2 weeks, folks, have gone from 62 to 68. You know, I mean, you get a shot that it's going to go to the 76 here, the March swing high.
Yeah.
Because it looks like, so this is, if you want to see a classic, folks, how, you know, we came down, this is, you know, the February 9th time frame that I've been talking about forever and all these equities in the sectors. You got down to $63.85. It was on the daily February 9th. Did 1.5 million shares. You go up to 76. You come right back down, test it. First test was 1.2 million versus 1.5. Then you didn't get any traction. Now watch this, though. This is what's really cool. Then you get another test with 660,000 shares versus the 1.5. Then you get one last one after you go topside with 1 million, and then you go downtown with 529. So watch the correlation, folks. You get 529, which was on, oh, this is interesting, which is on May 29th, 529,000. That was testing the 664, which is on April 6th. That was testing the 1.2 million, which was on March 29th, which was testing the 1.5. I always like to see something like that, Ken, because that is frustration in a huge way. You get 4 separate tests of that high volume low. Now you get a shot to basically go to the top of it. You know, what you'd want to see, yesterday was a really good day, man. Yesterday you had some strength in this thing. Did 480,000 contracts.
Well, and NASDAQ didn't do anything today.
Yeah, and, you know, basically it's hanging up there. I mean, it's not I expect you probably can have to build a little bit more cars, but you have a shot to get up to that 76. Let me just put this on a weekly for a second. So on a weekly, you're going to want more juice in it, but on a weekly, you can see what we're doing. It had a tough week, February? Well, that was February. The market had a tough time then, too. 74 to 63. But that's, you want to build some cars and see if you can get up to that swing point. Now, if you get up to that swing point and you have light volume, bottom line, I'd take the calls off. Did you say you have those calls out to 2021?
December 21, 2018, yeah.
Oh, 2018, December 2018. Okay, okay. Well, it's not looking bad, man.
Okay, we'll keep an eye on it.
Great to hear from you, man. Have a great one. Have a safe one. Let's go over and take a look at that GDX. We might be getting a little pump. Yeah, we are. We're getting a little pump up. Look at this. Okay, so we're getting a little pump up into the close out here. Someone just came in there pretty good. That was a $4 million share trade. Here, I gotta put this up. This is gonna be interesting. Yep, someone just hit this. So watch this, folks. This is always, when we're in front of computers like this is always intriguing. If you happen to be watching Tiger TV, you're going to see these trades come across. And look at the 1, 2, 3, 4, 5. You had 6 trades at 250,000 apiece come in. And you had more than that, actually. Then we had, look at them all, man. Then we had 2 at 67,000, 68,000. You put some juice into this baby. So what I expect you're going to see, let me just see something here. ABX, because this is always cool. This is like the chicken or the egg. And what ends up happening, let me see if they come into Barrick Gold. What ends up happening is that, okay, they didn't come into Barrick, is that the GDX, now someone came in heavy into the GDX, right? As you commit to heavy to the GDX, before the close out here, the GDX is going to have to go in and buy all the equities inside the GDX. This is where this thing gets really cool. And you're going to see, when we come into the close right now, we're going to see a big number inside this GDX. Because when something also happens this close to the close, you know, of course, they got computer programs that are telling them exactly what they have to do in order to have the net asset value be as close to what it actually is. So if I look at this net asset value right now, if you happen to be watching Tiger TV, what you're going to see is that we're trading 22.62. The net asset value right now is 22.58. So that's close to the net asset value. They're basically they're keeping this really tight. And that's good news. That's how you want it. There's no doubt about that. But we're gonna see some action coming into that close out here. What is happening simultaneously is that the gold contract itself, not that it's got a lot of action, but you're getting some movement out here inside that gold contract also. So we'll see the aspect of how the dollar performs coming into the close. Right now, the dollar had been up 300 ticks today. Right now, you're only up 63 ticks. What's more important inside the equity market, however, for the gold and silvers, is to see how they came in and how fast they came in. Because what we found last week was this: is that when gold came off the lows, you had Newmont as well as Barrick. There were large buyers in those two of those stocks, and we were talking about very large buyers. So that's going to be large funds that are coming in into those equities. And guess what? That's what you need in order to basically go a lot higher. You need those bids coming in. The faster the bids coming in, the bigger the bids coming in, the more expansion of price that you're going to get. If we go take a look at, let me see, AG. So AG is a silver stock. This had performed like gold. I mean, like Royal Gold had, meaning spiked much higher yesterday. We're at $8.48. Right now, you're at $8. Now, the thing that's pretty wild is about a few of these gold and silver equities is this, is that as we've been going down, this equity here has gone from $5 up to $8. You know, so there's been some pretty good movement inside a few of these equities. Stay right there, folks. We'll be coming right back. We have the Dow Industrials right now up 134. NASDAQ is flat. S&Ps are up 7.5. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over to Macy's and take a look at Macy's. So Macy's, the low of the year is 17, the high is 41. They're going to be coming out with their numbers on August 9th. And this just came over the tape. This is pretty amazing. It's not hitting the stock, but, you know, bottom line security, you know, is problems at all of these companies. So Macy's just said hackers obtained names and passwords of online customers and potentially were able to access data, including credit card numbers, expiration dates, birth dates. The data breach impacted 0.5% to 1% of the customers who were registered on Macy's.com or Bloomingdale's.com. This took place between April. It's a long period of time, man, that they were in there. This is what it's hard to comprehend. You get a monster company that, let's see what they gross. So their revenue gross is, $25 billion. And someone's not basically minding the store because this data breach occurred from April 26th till June 10th. They detected it on June 11th, and they blocked the profiles in question on June 12th. It's a long period of time, man. So, it's not hitting the equity right now, but we know that, the online atmosphere, credit cards, accounts, all of the above, it's just a never-ending deal. And it's problematic. It's problematic in a huge way. Volume-wise out here, let's see what we got. Inside the NYSE, they threw a huge amount in yesterday. I expect they're going to throw it in today, too. So yesterday coming into the close was really about the same, 461, and you can see we did 300 million into that close. So we'll see what we can get out here today, market on close. That's a big number right now. Well, it's a small number right now, but yesterday that number came in, and it came in big. Inside the composite, let's take a look at the composite out here. Composite right now is at 1.4 billion. We did 1.8 yesterday. The composite has a harder time putting big juice into it at the end, whereas the NYSE doesn't. Stay right there, folks. Numbers coming out after the close. To recap here, we have the Dow Industrials up 148. NASDAQ is up 4. S&Ps are up 9. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We have the Dow Industrials up 143, NASDAQ up 2, S&Ps up 9. Percentage-wise, folks, with the Dow is up 0.6%. NASDAQ really flat, S&P's up 3. What you can see out here is that it was the Dow Industrials that basically has taken the lead the last few days. Now, the Dow has been a dog. There's no two ways about that. Bottom line is that the high in the Dow is January. We're basically July 10th. January 26th, you're at 26,616. We'll see whether it can basically even make its last swing point. The last swing high was June 11th. That number is 25,402. Inside the Dow Industrials today, the strength inside the Dow Industrials, when you take a look at it, point-wise, Boeing. Boeing is always at the top when Dow's going higher. You get a price-weighted index. Boeing is a $347 stock. Bottom line, that put 35 positive points into it. Procter & Gamble put 13, United Health 12. Taken away from it, Goldman. Goldman Sachs, 7 negative points. JP Morgan, 4. Walgreens, 4. If we go over to Goldman, we take a look at Goldman. What's going to get intriguing here is that bottom line is that the financials had a good day yesterday. Bottom line is that, guess what, today, no traction whatsoever. You know, Goldman Sachs, bottom line, rang the bell at $250. 273. That 275 actually. 275. That was on the week of March 16th. That had taken over the 255 that was back in March of 2017. It came off those highs with volume. It actually looks like Goldman is building cars to get down to this $209 level, maybe even the 205 level. Goldman's going to be coming out with their numbers on the 17th. So bottom line is that, what's that, 7 days from today, a week from today, they're going to be coming out. Gold contract traded down to $3.30, $12.5640. Bottom line is that gold rejected lower price. It was going against its strength. And this is what you do see after a long downdraft, folks. So picture, the gold contract has been going down since the 11th of April. 11th of April, we hit a high out here of 1375. We get down to a low last week of 1238. Now, that's when we came off the lows, and we had strength off of those lows. When you see a long downdraft like this, you know, you need strength, number one, to get off them. We got the strength. You go slightly higher. Gold gave it up in spades yesterday, got up to a price point of $12.66, gave it up, ended up closing out at $12.59. Overnight, we go to $12.47. You reject it. We rejected it with 264,000 contracts versus the 294 versus the 393. So gold's going to have a shot now to try to get back inside its range. And it's going to take a lot of flack at this 1277 to 1300 number. Because when we came down on the 15th, that was a monster move. We came down from 1306 to 1277. Now, that being said, different ball game when you look at the equities. The equities, it's hard to even comprehend that the equities have actually held up. You know, we're talking about when we go back to April 14th. Well, guess what? April 14th, we go take a look at it. The GDX was trading at $23.98. Well, let me get the exact day. Here it is, right there. Right there. So picture it, $22.98. That's where the GDX was when gold was $125 higher. Well, we're still right there. That is impressive. That is saying that the market is believing that bottom line gold wants to go higher, believing that the gold equities, the silver equities, basically lining up to get into higher price. What we did out here today, we got to a lower price, rejected it, had lighter volume, did 21 million shares. You were going into 36 million. We just very well might have a small ABC structure on the way up. What is impressive is that one of the tigers picked us up in the den. Is that as we come into that close, we had a monster buyer in there. You can see if you're watching Tiger TV, you can see at 1540, all those block trades of 250,000 apiece, you get 6 of them, 6 of them. And right before that, too, you had 2 at 67 and 68,000 apiece. And so, look at them all, man. Holy cow. No, there was like, well, you know what they did? They started out at 25 past 3, they started out with 50,000, 52,000, 54,000, 57,000, 59,000, 63,000. And then what they did is this. They escalated the buy. Oh, this is pretty cool. I love when someone does this. So picture this, folks. They came in hard. They start coming in hard at 25 past 3. They started at the 50,000 level, and they just kept escalating. And then at 1540, they tried to blow it out of the market. They turned around and came in with 6 trades at 250,000, and then at the close, you had a. Now at the close, what happens at the close? We had 2.1 million at the close. What that would be at the close, though, folks, that would be the sponsor of the ETF coming in to get the net asset value as close as the true net asset value is. And they did a good job of it, because the net asset value into the close is $22.57. They closed out at $22.60. So the bottom line is that they kept it tight. Notes and bonds. Notes and bonds still reject to go lower. Pretty amazing, actually. And, you know, we'll see how this whole thing shakes out. What I expect you're going to see out here again inside that market is more than likely what you're going to see is that you're going to see this thing, let me get TYU8. We are going to see this baby go after its high volume swing once again inside the 10. That's 121.03. And we'll see what type of juice that we get. You know, what we did do on the 29th and the 30th of May, you had monster moves out there. You know, the 10-year went from 119.11 to 121. The following day, we went to 121. Big wide price spread again. Hasn't given it up since then. And more than likely what you have, and this would totally make sense, bottom line is that when you basically going and rolling contracts inside any market, particularly inside the treasuries though, you can get basically a short squeeze going, and fundamentally, we know we're going up in rates. Technically, it looks like people are still buying it. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully, risk including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now finished up 143. We had the NASDAQ up 2, S&P's up 9. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour. And don't forget, folks, we have Jason on every Monday morning. Tommy and I do in the morning at 10:40. He's on Tuesdays as well as Thursdays. His website is The Dutch Book. You can go over there and get a great newsletter. Jason, what's going on, brother?
Not much, man. What's shaking?
Well, I got to tell you, man, I'd like to start you with the dollar, but I'm not going to start with the dollar.
All right.
You know, bottom line is that we've had a lot of the currencies are moving, no doubt about that. We get the cryptos that are moving, and folks, he's got an amazing way of looking at the market. And so, what I'd like you to do first, and I know you did this last week, but just explain to the folks a little bit of how you look at markets and what do you do.
Yeah, first of all, thanks for the opportunity, Tom. We take a high-level look at the macros, use our own insight and expertise. We've been in Forex for over 10 years. We've been in cryptos for over 4 years. And we really start with a fundamental insight, using our own intuition, our own expertise, our own experience. But then we want to validate that with data. And so we're quantitative in nature. We do look at technical indicators, but our second step really is to look at quantitative data. So we'll model out GDP, CPI, we'll model probabilities on different moves that we like or don't like. We'll build forecasts in hourly, daily, weekly, monthly time horizons. And then as a third step, we will roll in technical chart indicators as well to confirm setups that we're seeing. We're biased towards the short term. We're biased towards the individual trader. We're passionate about supplying individual traders with sophisticated, high-powered mathematical quantitative research that, again, ultimately it's a circle, right? Once we get to those indicators, we loop it back around to our human level insight that we started with, confirm that the markets look as we thought, and we make our moves. But really the heart and soul of it is that quantitative analysis.
You know what's so intriguing too, Jason and folks, is this. So picture this. When you look back at the history of technical analysis, I've always said to people, I started out as I started out in a bankrupt bond business, okay? So all I did, my bedroom used to be filled with papers. I mean, as far as you can see, going through every balance sheet there is, right? And then when I figured out that, okay, everyone's lying, right? You know what I mean? Because I was doing bankrupt bonds at that point, right?
That's right.
And so I totally understood that part. And then when I got into technical analysis, what I loved about it is that the only difference is technical analysis is saying, okay, I'm speculating where the money's going, and then the fundamental analysis, I was believing what the CEOs were saying, right?
That's right.
And then when I really get into it, where most of my system comes off of was a guy named Wyckoff in the 30s. I love the price and volume analysis and all of that, right? And since we've had you on, and I love the work that you do, I'm realizing, I'm saying to myself, it would make sense that the whole data thing that you're doing is the next step in technical analysis, because everyone just keeps adding to this. Do you know what I'm saying?
That's right. That's right.
And so
there's close linkage to technical analysis, right? That's ultimately what you're looking for in technical analysis is patterns.
Yes.
And we believe we can detect those patterns there's so much more data available today than there was back then when we were papering our bedrooms.
Yep.
So it's an evolution, and I'm glad you see it that way too. We certainly do, where we're ultimately getting at the same thing. What are the patterns? What has history told us that the future might hold?
Yes.
And just a little bit of a different flavor.
Now, just to give you a taste of this, folks, this is where this gets even cooler, though, I think. And I'm following, let's say, I'm hoping I'm following where the money's going, right? Like if we talk about the Bitcoin analogies, what happens with the Bitcoin, I got his newsletter right here, folks, is that he'll take the Bitcoin and then he's looking at all, okay, what are the searches on Google? Let's explain that a little to the audience so they can understand what you're doing there.
Yeah, so we've for about 10 months now followed Google search volume.
Yes.
So it makes logical sense if you want to make reservations for dinner, or if you want to check movie times, or if you want to check how you buy crypto, you go on and you do a search online on Google.
Right.
What we saw in the run-up was a clean, almost one-to-one relationship and correlation there, as you see in the graph. As one lifted, the other lifted as well.
Okay.
Now, there's some lag in there. Someone may buy a little bit of crypto off one search and then buy a lot later. But but there was a high level of correlation, and we really see it as a proxy for demand. Your first step to buy Bitcoin is to download a wallet. Your first step to do that is to search for, how do I download a Bitcoin wallet? And as that run-up happened, we saw a pretty clean one-to-one relationship. What we're seeing on the way down now, as you see those lines separate, they're still moving in relationship, but there's some space between them. We're seeing a retention factor, and we're able to model that out now. 40% of the folks from the run-up are still at some level active in buying, selling, trading Bitcoin. So now we can model into the future how many of those folks are retaining on a 90-day basis, and because that demand for Bitcoin and crypto is really the key. We know what supply is. It's very transparent. They're gonna mine 21 million coins. Price moves in direct relation to transaction volumes, and we feel like a precursor to transaction volumes is search.
Now, all you Bitcoin traders out there, particularly Paul in Nevada, I want you to look at this chart I have up here, and I'll have Jason explain it to us. I have a cryptocurrency correlation matrix for 90 days, and I think you have not only Bitcoin, but you have a lot of the other cryptocurrencies up here, right?
That's right. So we track, because one way to forecast the other cryptos is they've been so highly correlated with Bitcoin and vice versa. So we'll track the changes within that. Typically, folks see the cryptos moving at the same level, but there's been some divergence. Crypto has been fairly fluid. Bitcoin and Ethereum move in a much more correlated fashion than they used to. Litecoin has deviated. And I think over time, you'll start to see more divergence in crypto, and we just want to be ahead of that game and understand as that happens and when it's happening. And so, yeah, we'll model out all of the top 20 major cryptos and understand how correlated they are to each other, looking for any arbitrage or divergence or any opportunities in the markets, anything that it could tell us about the future.
That is so cool. And then what he does, folks, he puts that together, and the next chart I have up here is that a Bitcoin value for the coming week. Now, this is Monday's newsletter, so bottom line is that what we have from 69 to 71.50. Is that where we're going now?
Yeah, so that was the apex. So we'll forecast the max value for the following week. So if you're trading an option or a derivative, on a weekly timeline, you want to know, what is a good strike. And what we really are modeling there is the probability. So for us this week, the 50% probability was right at 7,000. And we got to about 68.50 last night. Still a few days left. I know we're down today. Last week, our apex was 67.50, and I think the market got to 67.75. So we forecast based on probabilities there, and that's something else that we like to do mathematically. It's a little different from a typical technical analysis. We don't just like to know where the market's going to go, but we'll look at tail risk on either side. So we'll say, there's a 50% chance we're going to be at 7,000, but there's a 20% chance, it could be over 7,200. Not likely,
that's
not
cool.
probable,
no,
but you want to know as an option trader where your risk is, and there's a 1 in 5 chance it could go beyond that strike. And so as a trader, you can then go back and look at the values in the market, the price of the contracts, and see where there might be some divergence.
Which is crucial, because guess what, folks? That's when you start talking about pot odds, and if you get that extra $2 up or 20% up, guess what? Some of those options are almost nil at that particular point. Here, can you hang tight with us?
Absolutely,
man. What we're going to do, folks, this is going to be cool. We're going to be talking oil, but we're going to have the API numbers coming out right now at 4:30. Jason and I will go over them. We're going to go over what he's thinking about the Cushing, Oklahoma WTI spot. Stay right there. Come right back, folks. Stay right there. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Jason Paff, Tom O'Brien, we do appreciate you growling and prowling with us. You can go over to the Dutch Book and get Jason's newsletter. Great newsletter, comes out Monday mornings. Right now, as soon as these API numbers come out, we'll get them for you. The chart that I have up is the monthly Cushing, Oklahoma WTI spot price versus the U.S. field production of crude oil. So talk to me about this.
Man, a day of reckoning is coming. It's hard to forecast exactly when, but we've seen increases in supply. Clearly, we've seen an increase in price, and something's got to give. There's a lot of noise in the market right now about supply disruptions. Syncrude in Canada looks like it's going to be offline for longer than anticipated.
Okay.
Libya's way down. So there's some concern globally, but that's not a WTI story. That's not an American story. We continue to produce at record levels. Price continues to escalate. From a forecasting perspective, we believe we're at a top. We're going to range at this top for a while because there is a lot of noise in the market.
Yeah.
But the market might be imbalanced, but there's no real supply-demand narrative to go any higher than a 74 handle on oil.
Yeah, it's so intriguing that we just stay here. It's like, man, And when I look at the chart, Jason, it's like we're hitting the lows of 2011, I think, and 14. No, not 11, because we can out of 15. Let me get that exactly. But bottom line, this is the lows of the last high in oil, and that's what's given it a little flack here. And when you look at it, I have a hard time comprehending, because we're pushing so much oil out even ourselves. You know what I'm saying? That, okay.
That's right.
Let's see. Yeah, it was 2000. Yeah, the lows of what? Oh no, the lows of 2011 and 2012. That's where we're at right now. So.
Yeah. Well, we've seen a more intense spread between Brent and WTI. Obviously, globally it's a little different story, because the supply disruptions are meaningful. The OPEC limits have been impactful on some level, but domestically, we are pumping more than ever, and demand is fairly flat, incrementally up, but certainly doesn't support price at these levels. We think fair value is closer to 60, 65 currently. Everything factored in. We just coming out of the OPEC meeting. We took a couple of sharp shots up. Highly speculative, highly fundamental in nature. There's not really a narrative to correct down from that because the market's still sorting that out. But you know, we think we're going to continue to hang here for a little while.
No, I'm with you. And so the next chart I have is the relationship between ConocoPhillips and Brent crude.
Yeah, so ConocoPhillips, we feel like, has great exposure to this higher price, especially Brent. We see some opportunity over earnings season in some pure production plays like ConocoPhillips. They have operated very efficiently, very leanly at $74, $75 on WTI, even higher on Brent. That's almost 2x revenue for them on an annual, if you annualize that average. So we feel like, you know, their stock as they release later in the month could pop, you know, high 70s.
Yeah.
We started talking
about they closed at a yearly high today, you know.
Yeah, and
pretty cool.
They should continue to go up. Again, they'll have, you know, a full quarter at this new price level to report on, and if that average holds through 2018, that's 2x revenue on a similar margin structure. That's a really solid company to own in this environment.
Yeah, you got to love it, man. So we're just waiting for these APIs to come across. What do you got? Emerging markets. Oh, let's talk that until it comes out. What do we have in emerging markets? Look at this thing.
Yeah,
Ooh.
So it's a difficult story. We're bearish on EM. The funny thing about EM is, I mean, it's almost like day to day now. You know, folks are looking for any type of bounce. You hear a lot of noise about valuations are so attractive now. We feel like China's in trouble. We're probably more bearish than most, but we feel pretty solid. The data has been slowing. Obviously, the debt, it just continues to grow and is a longer term issue, but they've got some real problems. And you know, I don't know that the trade noise is really the top of their list in terms of problems.
Right. Because they've been going down for a long time. You know what blows my mind is that, folks, if you go back to last year, every analyst out there is telling you buy emerging markets. It's great. And it's like, man, what are they looking at?
Yeah,
and they're still saying it's great. And it's like, it's down like, what, 20, 30%? It's down to monster numbers, man.
That's right. We feel like it's got more to go.
Yeah.
It's going to bounce as, again, some folks might, you know, go long on a, you know, a valuation play, but it's still got room to go down. We're in the early innings of working through some of China's major structural issues, and they just don't have a lever at this point. You know, they've committed to deleveraging, but that's really been the only tool they've had. We've never really seen anyone at their size and scale with this level of debt. Clearly, they manage a currency, and they could always weaken that, but that comes with its own problems. But
now, as you bring that up, the next chart I have out here, and this is, you know, what gets so intriguing about this, Jason, is that, you know, I've been basically trading gold since, what, 2001. So now we're dealing 17 years or something, you know, on a pretty continual basis. And I remember, and I've had Jim Rogers on before, but I remember between Rogers and a couple other people there saying, listen, man, you just got to buy the yuan. That's it. That's it. Buy the yuan and forget it, right? And guess what? If you did that, you're in trouble.
Yeah, absolutely. And again, we think there's more pain. I mean, 6.7, 6.8. You know, there's still a long way to go there. That's all they've got. I mean, you know, that's not a tomorrow story. That'll take place over time. But the data, if you really look, and this is, again, we track, you know, CPI, GDP, every piece of economic data, it is all trending down. There's just no other way to slice it on China. And it just doesn't match current valuations, even though they've taken a pretty sharp hit. We still feel like there's definitely room to move farther south.
And what has happened in these markets, folks, this is what the mind blower is about some of these emerging markets, is that the indices have not only gone down, but the currencies have gone down.
That's right.
So it's like, oh my God, if you took American dollars and you basically put that into those, you're losing doubly.
That's right. Yeah, there's no positive narrative here. There's no real play. And again, whether it's fundamental, technical, or a data-oriented look, it's all headed in the same direction to us, at least.
Pretty amazing. So here, let me pull this up. We got, at least this API, they're always so late, man. Okay, I get the first number, though. So API said crude.
6.8?
Yeah.
6.7?
Minus, fell 6.8. You know,
yeah, so that was above, you know, consensus was about 4.2, which down 4.2.
Okay.
Which was 4-week moving. So I mean, that's a pretty healthy number.
Yeah.
We could get a little bump off.
Little pop. Yep. No, I can see that. Let me just look at this for a second. So you got, yeah, it's popping a little. That's the bottom line. This $75, man. This is going to be kind of grooving at the $75 for a while. That's what it looks like, and that's what you're saying, basically. Yep.
Yeah, 75 is a tough ceiling. So this may not be enough to break through, but it's certainly enough to keep us there. Obviously, we'll need to see EIA tomorrow, but you know, 6.7, 6.8. It's a pretty healthy number.
Gotta love it. Well, listen, man, we appreciate all the great work you're doing. Love the work. Look forward to having you on again. And, of course, folks, you can go right over to thedutchbook.com. Great newsletter. As you go through it, each of us are going to basically get to understand what you do each and every day more, which is, I love it, man. I'm telling you,
awesome.
I love, you know what it seems like? What I really dig about it is that you do I do the price to do the volume, and I love that. I love that when I can put something as fundamental and the data goes so deep on top of that, because, that's why certain things that you can actually feel, like when you're actually trading commodities, but you own the commodities. Like when I was doing the bankrupt bonds, I own the market. I own the bonds. It's like I knew where the bonds were.
That's right, man.
Different ball game. Yeah. Have a great one, man. Have a safe one.
You too, man.
Thank you. So cool. Stay right there, folks. We'll come right back. We had the Dow finish up 143, NASDAQ up 2, S&P's up 9. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go to Mark in Fort Collins. Hey, Mark, what's going on, brother?
Not too much. Long time no speak.
Yeah, how you been, man?
Hanging in there.
Good. Good.
Yeah.
Good.
Yeah.
And how's your wife, all her running? Are you trying to catch up with her?
Oh, always, yeah.
That's awesome, man.
Hey, talk to me about the small caps. Looks like a double top. Didn't quite hit the high, but volume's lightening up. And do you ever look at like the RSI at different, like when something's hitting a certain point at different times, it looks like there's a pretty good downslope to that from when it hit that a couple of weeks ago.
Is there?
Where it's hitting it now.
So let's take a look at it. What I worry about the small caps is this, is that I'd like to see a couple real sell downs first, because it seems that the small caps can come back so quick it blows my mind. You know what I mean?
Yeah, I know.
You know, so what you have here is that, you know, and I remember this so well, folks, and the reason being, Mark and folks, is that when the small caps were trading at 160, right? You know, bottom line, you know, I was shorting them right there. You know, I said, man, this thing, and if you take a look at this, I got it up on Target TV, you're going to see it was coming up here with nothing, man. It just didn't have it. And then guess what? You know, 2 weeks after that, it got juice into it, you know, and it was a lot higher. I mean, so in this particular case, I would let it test its high again, man. I just would, because it just seems that, and I'm being prejudiced to the point also, Mark, that I kind of like where the S&P is. The reason being twofold is that the S&P has not been able to basically hold price. You know, we're up 9. Yes, we're up, you know, something yesterday. But they're having a lot harder time, and a couple of those larger companies, fundamental, just are going to get hurt with these tariffs. You know what I'm saying? So it's like, so I'd just be more. I'm more prone to shorting the S&P. That's where my head's at. You know, but I can see it. What you're talking about, what he's talking about, folks, is this: your last high in the was 19 million shares, 170. Now watch how we come down. We come down. It was nasty. You come down with 34 million. You come down with 37 million. You basically laid out a low at 26 million. Well, on the way up, we did 19 million on Friday. We did 16 million yesterday. I did 18 million today. That's, you know, it's not a lot of juice.
Right.
You know.
Yeah. And it seems like the tariff argument is they favor when the tariff stuff blows, you know, starts blowing out of the news cycle and people aren't talking about it. Then the bigger cap stocks go up, and when they start talking about it and it gets to be big news, then the IWMs go up because they're not going to be as affected. So it's interesting to see that. No, it is, and I don't know if you know, the dynamic is pretty wild, and fundamentally, folks, it's going to hit. You know, I think we've all been in markets long enough to know that, you know, guess what? It lays out there. This is only the beginning, you know, and bureaucratically, it already left the station. And, you know, we've been around long enough that in a bureaucratic mess, folks, okay, you never want to get in the middle of a bureaucracy, because getting out is a freaking mess, okay, and it's already started. So guess what? Now, yesterday, you know, there's a story here that's kind of interesting, and real interesting, actually, because you're talking about the small caps. You had Morgan Stanley and Barclays come out saying that they think the small caps are going to get hit more than the S&P because of the tariffs. And where they're going with that is that they're saying, well, listen, a lot of these small cap equities need supplies that are inside that are going to get the tariffs, and it's just going to take a little bit longer, basically. That's, you know, to basically hit a supply chain. So, you know, I mean, I can see the deal. There's no doubt. You know, the thing that's so intriguing here is that, you know, the small caps did get much higher than everything else. You know, so. Okay.
Cooking, brother.
All right, thanks.
Okay, man. Have a great one. Have a safe one. Let's go back. I want to go back into those oil numbers. We got the first oil numbers. The rest of them should be out by now, meaning the full API of what else they got. Let's see. Here we go. Okay, so okay, here they are. So we had a drawdown of 6.8 million barrels. That's a big number. Cushing had 1.9 million drawdown. Gasoline was 1.5 million drawdown. Diesels was 1.9 million build. Cushing draw would be the 8th consecutive if the EIA data confirms it tomorrow. So tonight at 4:30, folks, you get the API. Tomorrow morning, 10:30, we get the EIA data. Let's see. So the forecast, as Jason was just talking about, the forecast was on a Bloomberg survey was 3.79 drawdown. You know, so we'll see where this shakes out tomorrow morning. If we just, you know, you take a look at oil in general, bottom line is that, yeah, it's got a little bid. You know, it hasn't backed down. That's the real bottom line, is that we got here, we take a look at this, we're at 74.37 right now. And, you know, the top tick high is 75.25, and that was last week. You know, if we go back to that bond market for a second, because this gets, you know, kind of intriguing. One of our tigers are talking about the 30-year, and they, you know, guess what? We very well may have bottomed out in the 30 years. What I think we have here, and this is what is going to get really intriguing, is that inside the bond market, folks, what happens is that you know, and we just had Jason on, okay? He has a huge amount of fundamental information. Well, the large bond dealers also have a huge amount of valuable information. Now, if we had enough computers or just enough time, you could do the same thing. And what that specifically is this. It's the amount of bonds that are out in the marketplace. It's the amount of bonds that are coming out in the marketplace. And I'm talking about specifically 10-year notes, 30-year bonds, okay? Because those are the two largest trades inside the future markets. What I've seen over the course of, you know, 20, 30 years is that when you have a short squeeze that comes inside the bond market, it is dramatic. And that is what we basically had to a certain point. Just people were caught on the wrong side of the market on the 29th of May as well as the 30th of May. What very well could be happening right now is that we might be in the same situation on one of these rolls. Because what has happened in the past is that these large traders can come in, they know that a roll is coming, and when a roll is coming, a roll specifically means that, let's say that at the end of July, that there is so many bonds that are called back in by the government, folks are shot the market, they're shot the market and they have bonds simultaneously. Well, what ends up happening is that when those bonds get called back in, most of the time, they're not going to just be a naked shot. They're going to be rolling out and they're going to have other bonds just to protect themselves. Well, when you get closer to expiration, what ends up happening, if a squeeze comes on, that can get as dramatic as you've seen. And bottom line, that's what we may have happening right now, right where we're kind of at. Because the way that this market has basically just stopped, meaning going down, guess what? You get bias, man. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we take a look at the NYSE, and bottom line is that they threw that volume right back into it at the close today. It did 300 million at the close. Let's see. We end up doing 726. So 726 million. Yesterday was 761. Right, we checked it 5 minutes before the close, and we were at that 426 number. Inside the Nasdaq Composite out here at 1.7. It did 1.8 yesterday. Inside the Qs, what do we have with the Qs? Qs out here. There she is. The Qs out here today. $177.32. 23 million shares. That's going against 35 million as well as 38 million. So 33 million rather. What I expect we're going to see out here is that we are going to see that the Qs bottom line try to test this high out here. Yes, they were right next to it. We got to 177.72 today. 177.98 is the high. There's no reason that can't get tested. That being said, we'll see whether it can hold, because the bottom line is that as you get up into that level, that might be a little rough level to basically hold. What we have had the last couple days, which is really unusual, is the NDX 100 as well as the Nasdaq Composite has basically, it's gone up, but the bottom line is that not the type of moves that they have had in the past. The NDX 100, the Nasdaq Composite, those have been the leaders going topside. The first time topside, the SMHs, which bottom line had taken a topside in a big way. As we close out the show out here, we have something happening because they just sold down the NQs 39 points. We just sold down the S&Ps. Let's see, we just sold them down 6 points. So I'm not sure what's happening at 4 minutes of 5. But the bottom line is that we have something happening. Oh, here we go. Oh, we get action. Trump is putting on another $200 billion in China tariffs. Oh, baby. Taxes, taxes, taxes. Here we come. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking right back here, 8 o'clock tomorrow morning. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.